Algorand just got commodity status. Does it change everything? What if one of the biggest reasons institutions have avoided crypto wasn't technology, but regulation? Recently, regulatory clarity around digital assets has become one of the most important developments in the crypto industry. And one project that's often mentioned in these discussions is Algorand. Some investors believe commodity classification could unlock new liquidity, institutional capital, and long-term growth. But what exactly does commodity classification mean? Is Algorand the only crypto that has it? And could it actually make Algorand more valuable? Let's break it down. What is commodity classification? Think about traditional commodities like gold, silver, oil, or wheat. These assets aren't issued by a company. Nobody owns them, and investors aren't buying them because they expect a management team to generate profits. A crypto asset classified as a commodity is viewed in a similar way. In contrast, a security is more like a stock. Investors buy it with an expectation that a specific group or company will create value and generate returns. Why does this distinction matter? Because securities face much stricter regulations. If a crypto asset is considered a security, exchanges, brokers, and investment firms face additional legal requirements and risks. If it's considered a commodity, the regulatory framework is generally clearer and often easier for institutions to navigate. For years, uncertainty around this question has been one of the biggest barriers to crypto adoption. Is Algorand the only crypto with commodity status? No. This is one of the biggest misconceptions circulating online. Historically, Bitcoin was widely viewed as the clearest example of a crypto commodity. But today, many major digital assets are increasingly being treated as commodities rather than securities. These include Ethereum, Solana, Cardano, Avalanche, Polkadot, Chainlink, and Algorand. So while Algorand benefits from regulatory clarity, it doesn't have a unique advantage simply because it's classified as a commodity. The key question is whether that clarity translates into real-world adoption. Does commodity status improve liquidity? The short answer is potentially, but not automatically. Commodity status can improve liquidity in several ways. First, it reduces legal uncertainty. Large institutions, banks, hedge funds, pension funds, and asset managers generally prefer assets with clear regulatory treatment. Second, exchanges may feel more comfortable supporting assets that face fewer securities law concerns. More exchange support can mean more trading volume and deeper markets. Third, regulatory clarity can pave the way for new financial products. Think futures contracts, investment funds, and potentially ETFs. These products often attract new capital and increase market participation. Finally, professional market makers are more willing to provide liquidity when regulatory risks are lower. All of these factors can help increase liquidity. But here's the important part. Commodity status alone doesn't create demand. Investors don't buy a blockchain simply because regulators classify it favorably. They buy because the network solves problems, attracts users, generates activity, and creates economic value. For Algorand, commodity classification removes a major obstacle. That's good news, but it's only one piece of the puzzle. To see meaningful increases in liquidity and valuation, Algorand still needs more developers, more applications, more users, more institutional partnerships, and stronger ecosystem growth. Regulatory clarity can open the door, but adoption is what determines whether people actually walk through it. So commodity status should be viewed as a foundation, not a guarantee. The future of Algorand won't be decided by classification alone. It will be decided by whether the network can compete and grow in an increasingly crowded blockchain landscape. Do you think Algorand is undervalued because the market hasn't priced in its regulatory advantages yet? Or do fundamentals matter more than classification? Let me know in the comments. And if you enjoyed this breakdown, subscribe for more deep dives into crypto, blockchain technology, and digital asset investing. Thanks for watching.